Welcome everyone to HueFin, where we trade different and also we're your trusted source of news, a price forecast according to the price chart. We're going to talk about Cardano and why Weiss Ratings is calling Cardano the most deeply undervalued crypto today in the market. We're going to look at another article that kind of substantiates that premise, and as well give you the fundamentals of Cardano and why it trading around 3 cents is to really be worth more than that. So before we get started in that article, and then always on our videos, we give you our price prediction, our price forecast at the end of the reviewing of articles to give you our perspective as to what we're seeing going on in the cryptocurrency space. So if you see this information as valuable information, hit that subscribe button, like and share the video. Join us on Twitter, Facebook, Instagram, and then on our website at HueFinancial.com. So now, article came out yesterday, okay, and Weiss Rating is actually trying to say that Cardano is easily, they did it through a tweet, and they're saying that it's easily one of the most deeply undervalued crypto assets on the market. Its price doesn't reflect its fundamentals. So once I saw this tweet, I had to go and find what type of fundamentals does Cardano has that should make it a higher price than where it's currently trading at today. And I did that, and this was an article right here. Don't worry about it. I'm going to have all the links to these articles on the description of this video. And this article was written back in June 10th, 2019. It gives us a fundamental analysis as to what makes Cardano different from many of the altcoins in the space today, and why it should be worth more than what we're actually being traded at right now. Okay, so first thing is that Cardano is meant to be a digital currency for an economy, and it's supposed to be using the ADA token, and it's supposed to make it scalable, more decentralized. And that's the first layer, because Cardano's ADA token, or its protocol, has two layers. The first one is the Cardano settlement layer. The second one is the Cardano computation layer. Okay, and it's a reason why Cardano on their protocol has segregated both those layers to make it a lot easier for and to give it more options for the economy to transact on multiple platforms. If you need it to be centralized, you could do that on Cardano. If you need it to be decentralized, you can do that on Cardano. If you need scalability, you can do that on Cardano, based off the scientific nature of them creating this protocol. Okay, now the Cardano settlement layer is for the digital, the economic transfer of value on a daily basis. That's the purpose of that first layer. The second layer is for the smart contracts. Okay, now this is where some of the value in Cardano comes in. This article also goes on to ask the question, why would you need to create separate layers for settlement and computation? Because Ethereum, they handle both layers on one, and it seems to be just fine. But the Cardano team doesn't feel that way. They are going under the premise that simplicity is the best way to go. So with their scientific academic approach to implementing this protocol, they're trying to find the simplest way to achieve the goals that the cryptocurrency space need to obtain in order to grab massive adoption. Okay, so now the Cardano settlement layer, the purpose is to account for value, period, to transact value between one person to another, or one entity to another entity. Their layer, it supports two sets of scripting languages, one to move value and another to enhance the overall protocol support. They also got a KMZ sidechain that can allow Cardano to be linked to other ledgers. Another purpose of the Cardano settlement layer is to support multiple types of signatures, including quantum resistant signatures for higher security, support multiple user issued assets, and achieve true scalability. I mean, as more people join, the capabilities of the Cardano system will increase. Now, Ethereum has a scripting language called Solidity. I don't know if that's still in play since they had a hard fork go through recently with Istanbul. Bitcoin has a scripting language and is too rigid. Ethereum scripting language, Solidity, is too complex. So Cardano developed Simon. It's a simple scripting language that can handle the range of common transaction types for the Cardano settlement layer. The main purpose of developing this scripting system is that it can be understood by more people, allowing wider usage, peer review, and in theory, enabling greater script security and execution. So that's why Cardano opted to use a simpler scripting language for their Cardano settlement layer. Again, on that particular layer, the sidechains KMZ operate much like other sidechain solutions, but there's one thing that makes it different. The Cardano specific sidechains allow for the movement of funds in and out of the Cardano settlement layer onto computational layers or other blockchains built to support KMZ or even Cardano. That's a big difference. You can take funds from the settlement layer and put it onto the smart contract layer. And if you see another blockchain that's built to support the Cardano KMZ sidechain, you can actually transfer value under smart contracts to other blockchains. The nice thing to note in regard to KMZ sidechains is that Cardano is already built with scaling its settlement layer in mind. Another thing that is fundamental to the protocol of Cardano is that the Cardano settlement layer is also the site of what is termed the user issued assets. User issued asset tokens won't require ADA as a fuel source because in Ethereum's case, they have the ERC tokens. But the ERC tokens require gas or more Ethereum to transact the Ethereum or the actual transaction. That alone in Ethereum case adds bloat and congestion and expenditures of resources. But in Cardano situation, you won't need that. Instead, Cardano or ADA will act as a bridge token, kind of like XRP, as a bridge to fiat on-ramps. ADA is going to do the same thing to create a decentralized market around other issued assets. So XRP is focused on the paper currency world. Cardano is focused on the digital asset world. That is another fundamental thing that can actually transpose the actual environment in the cryptocurrency space. And we haven't even talked about the Cardano computational layer. Now, this is where the smart contracts come into frame. They opted to create the computational layer as a separate layer. Decentralized programs will require some form of gas economics, and nodes will have to opt to include the transactions from those programs in their blocks, giving the network leverage over the types of behavior that are permissionable on the Cardano blockchain. So the separation between the CSL layer and the CCL layer allows for a degree of network protection from computational, legal, and moral perspective. The advantages of separating the CSL and the CCL layers of Cardano allow for a great degree of use case flexibility of what I stated earlier, especially for applications that require a blockchain but aren't comfortable with a public chain like Ethereum. So if you need to have a private chain, you can do that with Cardano. And then on top of that, Cardano is a proof of stake algorithm. proof of stake algorithms are becoming a staple of the blockchain world for a few good reasons, and it goes into here. But again, this is the reason why Weiss Ratings is stating that Cardano is undervalued. And from this particular article on Medium, it does make some convincing points that Cardano should not be trading down here at 3 cents, right? It has a lot more value than that. So the only reason that I can say that Cardano is not trading at a higher price is because Cardano hasn't implemented all of those things that it's trying to do yet. It has a roadmap, it has milestones that it's trying to obtain, but we're just not there yet. But they do have some very achievable goals in mind from that article that would definitely translate over into a valuable cryptocurrency. The only thing that we need to be determined on is how long it's going to take. So now, let's go ahead and talk about the price of Cardano. We did our video in Cardano on the 17th of December, and that's when the market in Cardano saw a massive movement to the downside. And we just decided to stay the sideline and let the market play out to see precisely what it's going to do, to see whether or not it's going to hold 3 cents. And as you can tell, the last couple of days in Cardano, it in fact did hold 3 cents. But we're still within a consolidational range. Nothing has really changed into the market in Cardano. What I'm going to do, we can bring this area down lower, because this is the resistance point now in Cardano, and it is still holding 3 cents going forward. Okay. Also, you can tell that we're still in a downtrend in the market in Cardano. So until we see this market in Cardano break this particular area here, we will not be seeing higher prices. So what I'm expecting over the next couple of hours is for the market in Cardano to trade in this particular vicinity. And as we continue to get some strength, price bars come through, then we will be translating over into one of movement higher in price, and the breakage of this descending line that I got drawn to occur. Okay, but we're not getting that just yet on the 4-hour chart. Let me zoom in real quick, get a better picture. Let me do this real quick. Yeah, we get a little bit more weakness in the market in Cardano right now. So, I mean, we can play this like on the 45-minute bars to see Cardano move lower. But from a daily perspective, what occurred right here on the 18th definitely was an indication that the market is holding 3 cents. Okay. So that alone, for us to play this market in the long term, we will expect the market in Cardano to play some higher prices. Now 3 cents ultimately is still support. So even if we do see the market in Cardano move lower, as long as we don't break 3 cents to the downside, the expectation is going to be for the market in Cardano to placate and move higher. Okay. Now we would TP the market, just to give you a heads up, right there at that descending line location in Cardano. So as we continue to trade, the market can find some resistance back up here around 0.034. We will TP the market at that particular vicinity, which will be about 2.88%. Okay, so in actuality, the market in Cardano is still playing out. We need to see a little bit more indications of strength coming through on a daily basis in order for us to really see that strength and that value come through for this cryptocurrency project. Okay, but in the long run, based off that article and what Cardano is trying to achieve versus the other cryptocurrencies in space today, definitely opts for it to be a more valuable coin than where we are at right now. I would definitely tell you that. So that is our perception. That is our opinion. This is our price forecast for Cardano going over into the next couple of days. Give us your thoughts, your opinions. Make sure you always maintain your profitability, and I will see you on the next one.